Good morning all. Thank you for joining us for today's webinar. The webinar is going to start very shortly. Hi, once again, welcome everyone. I'm Divya from Relativity Management Solutions India Private Limited. I would like to introduce today's presenter, Mr. Akash. He is a successful young entrepreneur, speaker, innovator, and payroll expert who helps business leaders. He is the director at Relativity, and he is known as a financial specialist for over 13 years now. He is also a frequent guest at events like hosted by NHRD, NAPM, TIE chapters, and IAHR related to human resources, finance, taxation, shared services, and entrepreneurship. He has conducted more than 210+ sessions offline and online, as well as Relativity's regular webinars every month like this. He is the host of Relativity Knowledge Series 2 and the lead author of Relativity's blog. It's time to start our webinar. Let's start, and over to you, sir.
I hope I'm audible to everyone. Good morning, and wonderful to see you all today. Guys, are you able to hear some chat on? Somebody can acknowledge? Yes. Okay. Wonderful. Thank you. Thank you very much. My wife will definitely disagree with the statement that I am young, but of course, young by heart, as always. Thank you, Divya, for that quick introduction, and wonderful to have you all here. What can I say? It's not exactly a sunny day, but at this part of India where we are, it's absolutely a cloudy one, and it's so thrilling to be among all of you. So with that note, let's quickly start today's webinar. We are, this is the regular webinar that we always do, and let's see what we have in post for today. The concept that I have taken today for presentation is more on the international payroll front. How many of you deal with international payroll or deal with Indian payroll, but also have international cases? You have assignees going out, you have assignees coming in, you have people moving around different offices, different locations. Let's see what the responses. Looking forward for your responses. How many of you have international payroll requirements? So we'll quickly touch base on a couple of topics on that front. International payroll, whether we have offices in other countries or not, but if our employees travel out of India, there are certain if, then, but, else, and all of that comes into play. And as we have practiced in the last three webinars, this one will also be something related to the quiz, though this time I've limited it to only 3 questions because looking at it as more of a important argument, we should definitely look at spending a little more time. So before we get into the updates section of the webinar, what we will do is we'll go through these questions. We'll open up Q&A for these 3 questions, and then we go to the updates, and then we will have Q&A there as well. Wonderful. Oh, that's good to have. I have there, so that there are a couple of people who are there who handle or who take care of international payroll, and I'm sure all of you can also add value to whatever we are discussing today. So the first question is there on your screen. It's not exactly the BBC with all the background music and all of that, but yet trying to do our best here. So taxation of per diem allowance paid by employer is on account of short-term or long-term official travel. What is it? Is it completely non-taxable, or is it non-taxable up to the amount spent, or is it a business expenditure? And we don't have to really discuss this in payroll at all. What do you think, guys? So you have your fingers on the chat, and let your fingers do the magic. Okay, B. How many of you agree with B? How many of you agree with A? How many of you, just are happy with C? Okay. C. Let it keep coming. Okay. So right now we have a majority B. Okay, I can see nobody's agreeing with A. Oh, there are a couple. Yeah, I just saw a couple coming with A. Okay. So let's just quickly take 5 more seconds before we go on to the answer. So I can clearly see there is a significant B, and then the next significant is C, and the least significant is actually A. Okay, so just before, I know a lot of you don't work on international payroll, or at least don't have cases of employees traveling outside the country, but yes, Sarika, you will definitely get a recording. But I definitely would like to mention what is this per diem allowance, right? For your benefit, maybe for your career in the future, or anything of that sort. So this per diem allowance is an allowance which is which the employee who is traveling is entitled for his 2 kinds of expenditures. One is his official expenditure, and the other one is his cost of living expenditure, right? When they travel, they have a bit of cost of living that has to be accounted for. Like, for example, whatever they get in India, they may have to pay a higher price there. Their food, their, of course, travel from one place to another, conveyance, what we call, on account of business travel is totally exempted. But this per diem has 2 components to it. One is the official expenditure of travel, and the other one is the cost of living allowance, even if it is for a short period, let's say for 7 days or for 10 days. You give that cost of living allowance as a per diem allowance, which is usually paid every day. So that is what we call as per diem. And the answer is that it is non-taxable until the amount spent. So all of you who have said B as the answer, claps to all of you. But of course, the ones who have attempted by saying A or C, the clarification is here. So per diem, as we spoke, is for meeting official expenses as well as the personal cost of living. What is paid as B should be actually included in 17 of 1 gross salary, right? And whatever is spent should be included in section 10 or 14 of I. And whatever is unspent will get taxed automatically. So let's say, for example, let's take a quick example here. You send somebody on a trip to Europe, and the per diem allowance that you are giving to this individual is 50 euros per day. And the trip is for about 15 days, which means 750 euros into 15 days is 750 euros. 750 euros should get added to section 17 of 1 gross salary. And then let us consider that the employee has spent what about 500 euros. Okay, let us consider the employee has spent about 500 euros as the personal cost of living, and he brings back 250 euros. Now, most of the times what happens is we don't have this information. We don't ask this information. We don't necessarily get into the details. Most of the times we don't even ask them to give bills for the item number B. Of course, for item number A, there is always bills that we get on a reimbursement basis. But for item number B, it's a flat rate. 50 euros, you do whatever you want with it is what we usually say. But then what the income tax department does say is that when that money is brought back to the country, which is unspent, so this 250 euros in this case, which has been unspent, is actually an income and it has to be charged to tax. So when you include 750 euros in 17 of 1, that is 750 euros as per section 115, we have to convert it into Indian rupees as per SBITT rates. And then in section 10 of 14 of I, we include the 500 as an allowance, which is deductible. So automatically the balance 250 euros becomes chargeable to tax. Now, what is the practice that you are all aware of? Any pointers, definitely will help. What is the practice? I know this is the law. We all know the law, but what is the actual practice that is happening? Do you get some kind of a declaration from the employee? Do you get some kind of a statement signed by the employee that I've spent everything? Do you report it in 17 of 1? Do you not report it in 17 of 1? What is it? Please use the chat box and we'll be happy to discuss what is the actual practice. And those who are actually dealing with international payroll can actually share what has been the practice in your opinion, in your experience. That will also help us, help all of us. So I'm waiting for your messages on the chat box. What is the practice that you are aware of or that you should follow in your opinion? Nothing is right, nothing is wrong. But then what is it that you're practicing is the question. Is there an internet problem? I don't think so. Everything is well. Okay, so somebody, thank you, Deepta, for being the first person to respond. Submission of bills is required. Okay, so Deepta, the question to you is: submission of bills is required for both A as well as B, or only for A and not for B? That's the question to you. Employee has to submit bills, invoices against the expenses that he has made against this allowance as income tax requires proof. Absolutely. Yes, for both A and B. Wonderful. Okay. For both A and B, So, okay. So this answers one part of the question where we say, we pay, per diem allowance, we do the official expenses, and we ask the employees to submit the bills irrespective of whether they have met the per diem allowance or not. Now let's come to the second part of the question. Do you tax the unspent amount? Or what do? Do you get it back from the employee or do you tax it? So this is one question. And the other question is, do you report it in 17 of 1 and give exemption under section 10 of 14 of I? So that's not even I think that is 1, if I'm right. Not sure. It should be taxed. It would be taxed. Okay. The should and would have a lot of difference. I like it. It would be taxed. Yes. It should be taxed. It would be taxed. Absolutely. But then so it actually means that you're not getting it back from the employee. The 250 euros, you let the employee use it, but just that you would tax it, or you should tax it. Wonderful. Is there any other opinion or any other practice that is being followed? And if there is anybody, so a lot of times what we have seen as payroll processors, when we onboard a new client, the clients are not aware of this requirement and this information. When we share that per diem allowance has to be taxed, it has to reflect on the form 16, the exemption has to be provided. Clients are like, oh no, we've never done it for such a long time. So what has been your practice in that sense? What is it that companies practice generally? What do you think? Should be refunded? Okay, there is somebody who's mentioned, while you dwell on these questions, our employee can give back the balance amount to the consent team. Okay, that is a hypothetical. Employee is never going to give back. Until and unless it is an advance, not a per diem. Of course, an advance, the employee always has to return whatever is balance unspent. But if it is a per diem, the employee is entitled to this per diem allowance. Remember, per diem is not the advance that you are giving. It is the cost of meeting the business expense, the business travel, right? So asking them to refund, maybe some companies may do it instead of a per diem. What they could say is, okay, we'll up to this limit, we'll reimburse everything that you spend. So if somebody does that, that's also a good way. Should be refunded by the employee. If not, the same will be taxable as perquisite. Okay. Will it be taxable as perquisite, or will it be taxable under 17 of 1? Because the definition of per diem is also salary. It is not a benefit, at least as far as I have read. But of course, we welcome all the interpretations that are available. Entire amount not transferred up front, so it is done in parts. So usually no balance amount. Okay, good. So I see there are a few who keep sharing their thoughts. Probably is it that the rest have limited awareness in this area? If so, what questions would you have to help to help us make you more aware on this topic? If it's a part employee salary, then it would be right to making the remaining amount taxable. That will be beneficial for both employee and employer. If it's a part of employee salary, so when would you pay? I mean, the employee salary would come into picture with the host country and with the inviting country, only if it is a long-term international assignment. But let's say if it's a short-term travel, like how I said, 10 days and 15 days, in that sense, it wouldn't actually be salary that. Okay, good. So if you have any questions, I told you we'll take questions again. So let your questions keep coming. But now coming to question number 2. Again, as I told you, the theme of these questions is international travel. So for employees or even for directors, doesn't matter if they are an employee or a director traveling to European countries, do we need a certificate of coverage from EPFO? For employees, directors traveling to European countries, do we need a certificate of coverage from EPFO? So the options are required only for long-term travel, is only if the travel assignment is like 1 year or 1.5 years or 2 years or 3 years or whatever. So that's option A. Or option B is required irrespective. That is required for both long-term as well as short-term travel. Short-term travel is like 1 week, 10 days, customer visits, meetings, business meetings and all of that. That is what I mean by option number B. So friends, you have your fingers on the chat, and let's see what the A. Okay. And guys, nobody's going to hold you if the option is right or if the option is wrong. So don't worry at all. It's just that we learn better when we participate. So feel free to participate. Okay. Oh, so I'm going to have a good time today. A. Oh, everyone is A. Okay, so somebody's B. Okay. Any more? Okay. So hey, how come am I receiving so many now for the second question and not for the first? Are you guys playing the odd man out game, that for all the odd questions, I'll take some time to answer? I hope that's not the case. Okay, so most of except for two, most of the responses are A. Okay. Sorry to disappoint, but the actual answer. What is the definition of long term? Long term is what, more than a few weeks, or probably one. Good question. What is the definition of long term? So when you have a defined period, let's say 6 months, 1 year, 2 years, 3 years, I think that is what we say as long term. I believe so. Okay, so for all of those who have mentioned A, sorry to disappoint, it is not A. I'll tell you the reason, because this change came in 2019, okay, and it was widely publicized in the early 2020. And do you know what we were busy with in the early 2020? Yes, we were busy with COVID. So this did not get the necessary publicity that it deserves, but actually the certificate of coverage specifically for European countries is required even if you send somebody for short-term travel. Any business travel, irrespective of it being short or long-term, to SSA countries, particularly to the European Union, the individual is required to have COC before the commencement of travel. After the commencement of travel, let's say it's long-term, you're extending the period from 1 to 2 years, you can always, reapply the certificate of coverage for the additional extended period. But as far as this specific case goes, even for short-term travel, they need to have the COC before commencement of travel. What we have seen is that the some of the countries are actually checking it right at the airport, like France, Italy, and Germany. And in the absence of the certificate of coverage, the penalties are actually heavy. We don't know the rationale behind enforcing such a stringent requirement even for short-term business travel, but it is what it is. So questions on that front? Happy to take questions on that front. Okay, what is EPFO, sir? EPFO is Employees Provident Fund Organization. The PF department is what is EPFO. Short term means any duration specified in the Act. India does not have SSA tie-up. I agree with you, Balakrishnan. India doesn't have SSA with many European countries. So if we are traveling to specific SSA countries, we need to obtain a COC. And while my team is going to share this deck, they will also include certain links which make this clear, and certain press releases that a lot of countries are actually, a lot of the country's social security departments have actually issued. and that there is also widespread PR for these instances in France and Italy of people being stopped and then asked to pay a penalty because they did not have certificate of coverage. So even those articles will be provided. But yeah, the real question, I mean, the real fact of the case is, on the ground, is this actually happening? So what we have seen is some employers have started aligning themselves to it. It is a regulation. There is very little that they can do about it. So some employers have started aligning to it, and then most of the others have also started, planning in that aspect. But then this is going to be an important compliance requirement even before we commence our short-term business travel. And when we say short-term, it, as I told you, it could also mean 3 days, 4 days, 5 days, 6 days, 7 days for client meetings, for visits, for factory inspections, for audits, for all of those. That is what it means. That's a good question, Sornamani sir. What EPO has to do with travel? EPO doesn't have to do anything with travel. I think the proof that I am covered under the social security scheme of the country from where I originate is where EPFO comes into picture. So EPFO actually provides this certificate, which is called as the certificate of coverage, which is an official document that you show to the country in which you are traveling, that see, I'm covered here in my host country, so I don't require any coverage in your country. That's what the whole concept is around. Anybody has explored any conflicting requirements? If employee is traveling to a non-SSA country, then how do we calculate the provident fund, or are you asking the social? Okay. So I'm sure Arun is there on this. My compliance man, Arun is there, so he'll be able to take this question seriously. I'm not aware of this question in this depth. So I'll have Arun take this question in a couple of minutes while we continue to work on other questions. Arun, if you're listening, you can look at this question and we can discuss it once we get to the Q&A. Okay. If I am not a contributor of Provident Fund, will there be consequences? No idea. So SSA countries is where we have a social security agreement is there, right? So if you do not contribute to a social security of either the country from where you are originating or the country in which you are being hosted, what would be the implications is something that we still have to go into detail. All of this development happened just over the last 2-3 weeks, so we also haven't spent a lot of time discussing about it or digging about it. But I'm sure as and how we get updates of these specific questions, we'll definitely share it with all of you as well. And the request to all of you, 100-odd participants in this forum, is if you get some updates, please feel free to share it during this forum. All the rest of them, I'm sure will appreciate it a lot. Okay, moving on to the next question. While Arun takes the Provident Fund COC question subsequently. Taking advantage of the gig economy, how many of you employ consultants? Not only consultants, but either only consultants or consultants also. Nowadays people don't want to get tied to a job full time, so they say, okay, I'll consult with you. You pay me hourly rate of $10, $15, $25. I hear it has even gone up to $30, $35. So if you are taking advantage of this gig economy is where freelancing, self-employment is what the gig economy is. What happens when you send a gig worker on a fully paid trip? So let's say you have a project and there are 4 contributors to this project, and 2 of them are your employees and 2 of them are these gig workers. And 6 months later, they have completed the project on time, with flying colors and all of that. And you want to reward them. When you want to reward them, remember there are 4. 2 of them are gig workers and 2 of them are your employees. What would you do? That is, so when you reward them with a fully paid trip, right? What would you do? Would you just book it as a business expenditure? Would you deduct TDS on that value? Or the third, not so kosher thing is to do nothing. Okay, a lot of B's out there. Okay. A, somebody says A, B, okay. Balakrishnan in the absence of SS, okay. B, okay, most of them are B. Any, I know C would be a very controversial item, but I'm sure that is not being taken as an option. But A and B, okay. So Jyoti, can you please tell us what is A and B? That's an interesting combination. I would really like to see what is A and B. So most of them are B. Most of them is B. Okay. Few of them are A. But then what is A and B? Jyoti, we would like to know a bit of clarity. A, okay. Yeah, 10 more seconds, guys. Come on. No, this quiz is going to, I think few are like the 12th angry man in the movie. B. Okay, let's move to what it is. So most of them who said B, I believe your response is specifically for the gig workers. And this particular question arises because of this new section that has been introduced, which will be in force, Padmajyoti, if I'm right, from the 1st of July 2022. Is that correct? 1st of July, I guess. Section, or just correct me if I'm wrong, Padmajyoti, if you're there on the Section 194R, as the department widens its net to bring all the incomes that is escaping tax, right? Section 194R applies for all the benefits provided which are exceeding 20,000 rupees per annum. See, the problem with perquisites is that it is only applicable to employees because it is a subsection of the section which is only applicable to employees, right? So the gig economy may have benefits, but they cannot be classified under the perquisites, primarily because Section 17 of 2 does not apply to them. So what the Income Tax Department did is that they introduced Section 194R, and this applies for all the benefits provided which are exceeding 20,000 rupees per annum. So you forget international trip, even if you send your gig worker a gift which is worth 25,000, you have to deduct TDS on that. Whether you recover from the gig worker or not is your problem, is what the Income Tax Department says. I didn't say that. But then you have to deduct 10% and you have to pay TDS, and then it will be considered as for the computation of income, not as for the computation of income of that individual. So if you send your consultants on a fully paid vacation because it is a benefit being enjoyed, by them, TDS at 194R shall be applicable. What the department contends is, if you did not provide this benefit, you would have compensated them in something, right? You would have given them a bonus, you would have given, I mean, in whatever way, which when you pay them in cash, you are obviously going to deduct TDS, but a lot of companies are circumventing that by paying them as a benefit and booking it as a business expenditure. The real story here is there is actually no loss to the employer. But then this income which was escaping assessment is now going to be tracked. And once you deduct 10% under 194R, obviously it will get reflected on the 26AS, and all hell breaks loose, if you want to say. That is how some people perceive it. Okay, so questions. Yes, okay, 1st July, right? So if you have somebody, send them off before the 1st of July and get them back. Don't send them off. How much TD is applicable? 10% or any other? I think it is 10%. Padmajyoti, can you please confirm whether 194R is 10% or not? I'm pretty sure it's 10%. But then we'll wait for the operating expert to also confirm. Any other questions? So we've finished these 3 questions with respect to the gig economy, the international worker, and the compliance, and all of the podium items to it. Happy to take your questions before we move on to the updates. Happy to take your questions. If somebody would like to add value in terms of, okay, I know this, but you did not talk about this, Akash. Why, so I wish to share something with the forum. Please feel free to share. Learning is not only from me to you guys, but from each other, and that's what this whole chat and the quiz is all about. It's all about how we can learn from each other. So any other questions, any other practices, anything that you do differently, any discussions that you'd like to have, we are waiting for it. We have about roughly 2 minutes before we move on to the updates. Not many, though there are a couple of updates on the statutory front, which is Provident Fund, ESI, PT for Maharashtra. So we'll quickly discuss on that. No questions at all, huh? Okay. It isn't really a sunny day today, I guess. Right. Okay. So if you guys have questions, feel free to post them on chat, but not letting go of any more time. Let's quickly, we're not going to deal with the high scorers because there are only 3 questions today. So the first update is about the EPFO circular on the principal employer. Is that the principal employer needs to register and declare the contractors that they have under the EPF portal. So earlier this facility was there, it continues to be, but just that now they have made it, the word mandatory for all the contractors to be declared, so that the Provident Fund ensures that the data submitted by the principal employer and the data submitted by the contractor in terms of number of employees being deputed and all of that is correct, and the real beneficiary, who are the contractors, actually get their fair share of Provident Fund. A welcome step, just that it adds to the activities that the employer has to do, which is even otherwise numerous. We have to continue to do these numerous activities continue. So that's update number 1. And then we have, the second update is with respect to, the final withdrawal on the Provident Fund for international workers. So there was this question. I mean, that there was this confusion in the industry with the Provident Fund office itself. For SSA countries, we know what has to happen, right? The money can be transferred to the SSA country's social security scheme, and he gets it credited in there. social security scheme at that country. If they have spent a limited time in India, that money goes to them there in the country where they actually live. But what about those non-SSA countries? Like how our friend Balakrishnan, if I'm not wrong, did mention that we don't have a lot, many European countries, we don't have an SSA. So if that is the case, then what happens to those international workers who have come to India, who have, contributed about 10, 15, 20 or 25 lakhs or whatever the value is? How do they take the money, right? So this circular actually clarifies that in case India doesn't have an SSA with that particular country, at the age of 58, the complete provident fund accumulations can be diluted and can be withdrawn by the international worker. But of course, it continues to be 58. There is no change there. But just that, even for non-SSA countries, don't delay, don't have any questions, just redeem the fund and pay it out to the international worker is what has been clarified. Of course, I also mentioned that there are two more updates that we've not included here because I got to know about it just as I walked into office. One was about the Maharashtra professional tax, and I think you're all aware that the Maharashtra professional tax website had a lot of glitches over the last couple of months, and their extended timeline is getting over by May 2022. So end of May 2022. So all if you have offices who are paying professional tax in Maharashtra, please make use of this opportunity. I believe the government has given this additional timeline so that employers need not face any penalty of not compliance. The fourth item, which also I was appraised as I walked into office, was with respect to ESI. May I request Arun to please give that update? ESI, Arun, can you please speak regarding the update on ESI? So that everyone can benefit. I know one part was regarding the extension of timelines for payment, but what's the other part? I didn't get it. You can unmute yourself and speak out. While Arun jiggles with unmuting and speaking, because obviously this is out of syllabus. The rest of you, if you have any questions, please use the chat. We have another 10-15 minutes to go, and we can take your questions. And while Arun still continues to juggle, I got a quick chit that May 19th, we are going to have a Form 16 webinar. And, I told my team that I'm okay with one webinar a month. Let's not show my face all the time. I would like to keep that reserved for certain special occasions like these once a month. So this webinar, I believe, is going to be run by my very competent colleague Padmajyoti, who has been working with us for quite a few years, and she can really go in and out into the Form 16 aspects. While you guys told me the time, the date, the time hasn't been told. So Divya and team, you can just put the time on the chat. And if you're interested in the Form 16 webinar, please feel free to join. The due date for issuance of Form 16 is 15th June. The due date for filing Q4 Annexure 1 and Annexure 2 returns is 31st of May. And the due date for filing tax returns, the individual income tax returns, is 31st of July. Unlike the previous year and the year previous to that and the year previous to that, we do not expect any extensions in timelines because, I think all the issues with the portal and everything are settled. So I'm pretty sure we won't have a situation where the department is going to extend the timelines. Okay. Go ahead.
So this update is like not only for the month of March 2022, it is extended. We have extension for the filing period, like October to March 22. Those who have missed or they are keep pending for those contributions, they have an option to file their returns only after 45 days of the March completion, like 31st March. After that 45 days only, they have a timeline. So now they have extended that to 26th instead of 11th May. So that will be the
another 26th May instead of 11th May.
Correct.
And that is the half yearly return that you're talking about, or is that
no,
annual
this is
return?
The normal payment. Those who keep pending, they can use this facility and they can update it.
Okay. Understood. So only for those pending cases which have been, the original date of compliance is 45 days from the end of the financial year. It has now been extended by 15 more days.
Yeah, correct.
Wonderful. Okay. What else? Is that all?
Yeah, that's all.
Wonderful. Thank you, Arun, for that quick update. Okay, so there are a couple of questions. Before I take the questions, and I keep getting these chits from my team because they think that I'm going to miss what is important to them. So all of you are very, most of you keep coming to our webinars on a regular basis. I know you are by heart with this screen. So this is more for those who have come here for the first time. Some facts about Relativity is that we are 13 years and young, 153 clients and counting. We do about 1.2 million transactions a quarter. Our accuracy rates are about 99.5%, operating in 16 cities, and with great pleasure announcing that this year we will be issuing 500,000 Form 16s. So this 4.76 will go to 500,000, and that's at certain places. I just am so privileged to present these numbers because we compete with the big and the biggest, the biggest and the best. Having said that, if you have any requirements, any questions in these 4 areas: payroll, taxation, compliance, and accounting, Naveen, Divya, Geeta, myself, Radha, Padmajyoti, and we have 44 other team members who are waiting to solve your problem, who are waiting to innovate, who are waiting to make a difference, who are waiting to provide value to you. So anytime in the future, today, tomorrow, you have a requirement, do not hesitate to write to us at all. And please, there is so much of stuff that is happening on LinkedIn. The best thing that I like is every week, if I'm right, we have a quiz. It's not this complicated. It's a little more simpler version. But I think how many quizzes have we run on LinkedIn? And the participation is just amazing. Divya, how many quizzes have we run on LinkedIn? I think she's put it. I'm sure we should have crossed about 50 weeks. On our YouTube channel, we have extensive knowledge for HR professionals, and our blog, our newsletter, everything is so much curated to share valuable information to all of you. So please, Divya has put our links on the chat box, and now is the time for us to take the questions. So Durga asks, can an individual work in 2 companies at the same time? How to consider PT and PF in that case? See, the law doesn't prohibit an individual from working in 2 companies. It is the company's policy which prohibits the individual working at 2 different companies. At least most of the companies mention it in their offer or appointment order, or for most of the companies, it is a part of contract that they sign with their employees that they will not work at 2 different employers. But having said that, Provident Fund and professional tax has nothing to do with the employees working at multiple employers. It is the employer's liability, right? So if the employer is paying this much to the employee, you deduct this professional tax. If you as an employer are paying this much to the employee as gross salary, if it is limited to 15,000, deduct 1,800. If it is not limited to 15,000, it is 12% of basic. If the gross salary is less than 15,000, it is gross minus HRA, 12% of gross minus HRA. So irrespective of how many places the employee is working, this is employer's liability. It has no bearing on whether the employee is working at one place or at multiple places. I hope, Durga, that is clear to you. Great to know about the session. Krishna, thank you. Can we get updates in meeting invite itself? So it will be useful for us in processing Form 16 for last fiscal year. Can we get updates in meeting invite itself? Do you mean the agenda? If you mean the agenda, yeah, I'm sure we can try to make that happen. BD team can note that. I want to know on a, okay, Madhumita asks, I want to know on a Supreme Court ruling on Provident Fund wages that for PF calculation now, should it be on gross salary or still basic HRA and DA? Okay, so this is a very long discussed item, and there is actually no ambiguity at all. So there are two levels. Okay. If your gross salary is less than 15,000, the 12% recovery will be on gross minus HRA. Full stop. If your gross salary is more than 15,000, then depending on what your policy is in your organization, whether you are limiting it to 12% or you're not limiting it to, whether you're limiting it to 1,800 or not limiting it to 12%, it is on that basis. So that's what it is. And this is a very publicizedly discussed topic. So please, I hope the clarification that I gave is useful to you, Madhumita. If you have any questions, just let the questions keep coming, guys. My BD team is going to kill me. I got another slip. Boss, you haven't asked for poll, asked for feedback. So here you go. Feedback is launched. Please, it'll help us be better because it tells us what your preferences are. It also has one or two sales questions. Feel free to answer, and it will definitely help us for the investment that we are doing. Sornamani, when is that wage code will be implemented? Sir, that's more of, earlier it was $1 million question because everybody was like, but it has been delayed for such a long time that now it is not $1 million question. I think it is not even $100,000 question. The wage code expectation is that it should come sometime in this period, from anytime from July to December, because now what we see is there are only 4 states which are pending notifying the rules. But apart from that, all the other states have notified the rules except for except for these 4. So once that comes in, the new wage code will be implemented. And Pawan Shukla has given his email ID. Okay, our team has given their poll. Okay, yes. We need to register PF wages. Okay, is EPS not applicable for new UN generated? No, EPS is a mandatory, bifurcation. The 8.33% from the 12% has to go to EPS, and the 3.67% has to go to EPF. It is mandatory irrespective of whether it is a new UN or an old UN. I'm sure that is what it is. Venus Aurora asks, can you repeat it one more time? Which part of it, please, Venus? I'll be happy to repeat it absolutely one more time. What is the slab for maternity leave policy? there is no slab for maternity leave policy per se. You have to give maternity leave for 6 months, fully paid maternity leave for 6 months, for all those who start, I mean, who start to, who wish to start their family as a part of maternity. So there is actually no slab. It is 6 months flat, irrespective of the level that they're in the organization, junior, middle, senior, very senior, highest, does not matter. It is 6 months. Okay, there are a couple of, is Aadhaar seeded with UN mandatory now for depositing Provident Fund? Arun, can you take that question? Madhumita, thank you. Pawan, thank you. Yes. Okay, when will the PPS is not applicable for those who have basic salary more than 15,000? There are some conditions for EPS applicability. We'll send it as an email. Okay. About employees who are working in two companies, how their provident fund will be calculated. So it is my understanding that the law does not, and I'm sure most of you also agree with it, the veterans, that the law does not prohibit you from working at two different companies, right? Of course, that there are some niggles here and there about your UN being mapped to two different companies. I don't know how that works, but generally speaking, we don't have a law which prohibits you from working at two different companies. So the deduction of TDS, the deduction of Provident Fund, the deduction of ESI, as well as the deduction of PT or any statutory deductions is not dependent on how many companies parallel employment the employee has. It is dependent on what you are paying and what what your obligations are as an employer, right? So let the individual be employed at two different companies, but if you are covered, if your company is covered under Provident Fund, which means you have to deduct Provident Fund. And if your company policy says that you have to deduct 12% on the basic, which means you have to deduct 12% on the basic, irrespective of how many companies this individual is working. The same thing is with professional tax, right? So for you to deduct 250 rupees, I think, for Karnataka, your income has to be in excess of 35,000 per month. So if your income exceeds that limit, you just go ahead and deduct that 250 bucks every month, or 200 bucks every month, whatever it is, irrespective of how many times or from how many employers the individual is receiving the income. I hope that is clear. That is what your question was, Venus. That is all. It is mandatory to seed Aadhaar for PF payment now. Okay, thanks Arun for the clarification. She has joined in the company only, has completed, then she is eligible for maternity leave. Please tell me, sir. She has joined in the company only and has completed how many days? Has completed 6 months. Okay. And then she's, yes. So I think the eligibility for maternity leave is 90 days of continuous employment. Is that correct, Arun? Is it 90 days of continuous employment for maternity? If they have completed 90 days, then it's all done. You have to give them maternity benefit. Yes. We'll just is it 90 days, Arun? You can just put that on the chat box that everyone knows. Okay. Is it applicable for gig workers as well? You are talking about professional tax and the Provident Fund and ESI for gig workers. No, gig workers are not your employees. They are your consultants, right? So they are freelancing with you. They are not your employees. You don't have an employment contract with gig workers. So what happens in this case is that the gig workers, you will pay them on an invoice basis, which means they'll give you an invoice and you will pay them against the invoice. On that invoice, there is only 10% TDS applicable if they are professional workers, and that is what gig workers are in most probability. Okay, but then there is that in the new wage code, there are certain benefits that the gig workers are anticipated to get, but there is no clarity until now. So as and how the clarity comes, as and how the Provident Fund, modifies its rules and regulations, I'm sure, we can speak about whether Provident Fund is there for gig workers or not. But right now, as on today, there is no Provident Fund, there is no professional tax, and there is no ESI. The only thing that is applicable for gig workers is the TDS recovery on their invoice line. Okay, we see a lot of emails. 18. Okay, so it is not 90 days, it is 180 days. So if they complete 180 days, they are eligible for maternity leave. Thanks, Arun. If not completed 90 or 180 days, then can the company deny maternity payments? Like how the compliance has to be taken care of. So if they have not completed 180 days, then the act itself says that they are not eligible for maternity leave, and so you don't have to pay them the maternity benefit purely as per the act. So that's up to you, and there is really no compliance requirement in that case. Just that you have your records clear in case there is a inspection from the local labor officer. You should be able to satisfy the condition that this is the actual date of joining, and so some employers follow this probation period, date of confirmation, and all of that. The Maternity Act is very clear. It's not the end of probation period that this 180 days starts. It is from the original date of joining. So even if there is 3 months of probation, the actual date of joining is the original date of joining, not the date of confirmation. So the Maternity Act is very clear on that aspect. No specific compliance to be done. Okay, we are working Monday to Friday. Then how will be 180 days calculated? So it is not 180 working days. It is continuous employment, right? So even if you are working between Monday to Friday, you are paying your employees for the whole. I mean, let's talk about this for the whole month. It is for the whole month that you are paying your employees. So when you are paying for the whole month is like 1 month, and 6 months like that 1 month, irrespective of the number of days that you're working. It's not 180 working days. It is 180 days of continuous employment. Thanks much on the MAT compliance concept. Okay, thank you. If Jay has asked, if someone is resigning immediately after maternity leave, is there a way to handle it? There is absolutely no way to handle it. There is absolutely no way to handle it. Yes. If the employee resigns and wants to leave the organization, whether company has to pay for the remaining maternity period. So technically, what you're saying, Krishna, is that you have paid the first month. After completion of the first month, the employee submits a resignation letter and wants to quit. So you will pay maternity until their last working day. That is all. So let's say if their last working day is 30 days, after the first month which you have agreed, then it is the first month pay and the second month pay. That is all. From the third month, you don't have to pay because the employee doesn't exist on your company payroll, right? So there is no need to pay as per the act the remaining maternity period. Wonderful. I think all the questions have been answered. It was very, very nice interacting with all of you. Okay, I get another question. Preeti asks, how does experience count in case of maternity leave? How does experience count? Sorry, I did not understand. Could you be a little more specific with that question? Are you asking? Are you asking different employer experience or only your employer experience? So irrespective of whether the employee has completed 1 year of experience, 1 year of employment with you or 10 years of employment with you, for their maternity, two times in their life cycle, it has to be paid. That is what it is. Team have a query regarding maternity eligibility. Thank you, Sonam. In experience letter, if the employee resigns just after maternity leave. So on the experience letter, their last working day is still going to be the last working day as per your company records. That is what it is going to be, right? Just because they were on maternity leave does not mean that they're not working as per on the company records. Yep. Wonderful. So a lot of questions. Anyway, we are out of time, and thank you everyone for your generous questions. I hope all of you have taken the feedback and sales poll. It's still there. If any of you have not, given us your feedback or the other questions, I would definitely love to know your feedback. Next time or the next session next month, when we have this, we are not going to have the Q&A type, because it's about 3-4 months that we've had. So the next will be a little different. We will try something different, right? No harm in learning different ways. Yes. Okay. Thank you very much, and all the very best for all the efforts that you take and the work that you do. Wish you great days ahead. Until next time. Tata. Bye bye.